I want to now go to Ajay Singh. He's an energy and shipping expert, advisor to Japanese corporation based in Tokyo, to give me a worldview of where this goes now. Ajay, appreciate you joining us. Oil prices surging today, eclipsing $100 per barrel, going as high as 114, then coming down after reports that the G7 could be meeting to possibly dip into their strategic reserve, that Aramco could have spot sales. How do you explain this crazy volatility in oil prices in the last 24 hours across the world?
Well, bear in mind that the markets have opened today after the weekend. Now, the US had set out some rather ambitious goals, things like regime change and unconditional surrender were the terms coming out of Washington. Quite evidently, none of those sorts of things seem to be happening. So we are in day 10 or 11 of the conflict now. And considering that 20-25% of the world's oil and gas comes out of that Strait of Hormuz, which continues to be blocked. There is no oil and gas being exported out of the Persian Gulf right now. So the markets have simply taken fright, and that's been reflected in the sharp increase in oil price. Now, that said, I think the point is that the fundamental supply position in many parts of the world does not actually justify just yet such a dramatic increase. There are significant stocks of oil and gas, commercial stocks, as well as the so-called strategic reserves in many countries around the world. So we are not at the point yet where there is likely to be a physical scarcity, but the markets are factoring in the possibility of this being a protracted war because the Iranians are actually fighting back.
May I ask you to look at, for a moment, at the Strait of Hormuz, which in an article that you wrote, you said that this is really the critical factor affecting oil economies, handles about 15 million barrels of crude oil per day, roughly 20% of the world's supply. Are we to assume that as long as the situation remains unresolved or uncertain in West Asia, the Strait of Hormuz blocked to many ships, we could continuously see this volatility? Is that now key before we can give, what will it take in a way to give a measure of calm, you believe, to oil prices and markets?
Well, I'm afraid I think we will continue to see this sort of volatility because that volume of oil and gas supply going off the market suddenly, it's impossible to replace in anything like several months or even years. So the markets will continue to be sensitive. Now, when you get visuals on television of Iranian drone and missile strikes on tankers or on oil and gas production facilities, they look very dramatic. The actual destruction of oil and gas assets is not that significant, thankfully, but it looks very dramatic. And in the day of social media and 24/7 television coverage, this immediately gets amplified in the oil price. What it will take to really calm the markets down is an end of the conflict. I think what's happening at the moment, I'm not a military man, but it would seem that the US and Israel are engaged in a systematic degradation of Iranian military capabilities. They have said it will take 4 to 6 weeks, let's say by the end of this month or early April. By then, if there is a very clear subsidence, reduction in Iranian oil and Iranian attacks on shipping or oil and gas facilities, then the markets will calm down. Or if there is some sort of a conciliatory message coming out of both Tehran and Washington and Jerusalem, some sort of a political settlement, ceasefire, what have you, that is really what is needed to calm the markets down.
But let's just for a moment look at India. India's exposure to the Straits of Hormuz is huge. I gave those details. I'll put them up on air again. These are very troubling times in that sense. Is India far more impacted than many other parts of the world, or are we just as impacted as any other Asian country in particular?
I think India is as impacted as many other economies in Asia. China and Japan are also critically dependent on the Persian Gulf for oil and gas supplies. But yes, India's situation is potentially quite sensitive. I think the government has announced, I was reading in the press, that they have 74 days of stocks, commercial and strategic reserves. Against the sorts of timelines we've been discussing, that seems like a reasonable position. So let's hope for the best. I think in case of LPG, the dependence on the Persian Gulf is particularly high, 85-90%, as you said. I think
Right.
going forward in the long run, that's certainly something to look at. That level of dependency on a single region is far too high. And in case of LNG, I think the tendency of Indian buyers to purchase uh, more volumes when prices are favorable and not to maintain very high levels of strategic reserves, that's also something which perhaps will need to be reviewed going forward.
Just to ask you in conclusion, alternatives to mitigate this disruption of energy flow via the Straits of Hormuz. Do India and other countries have alternatives to mitigate this disruption of energy flow?
Well, we'll have to look for supplies from other locations. So when it comes to both oil as well as LNG, the United States is a major supplier. The need to find shipping in the short run to bring those supplies to the markets, that will be the critical factor. There are other regions as well. You would look at perhaps West Africa for more oil supplies and so on. But within the Middle East itself, Saudi Arabia has a major on-land pipeline with the capability to divert volumes from the Persian Gulf to the Red Sea. The Red Sea has so far remained closed to shipping as well because of the threat from the Houthi rebels. But perhaps that may be a quieter zone compared to the Persian Gulf for now. So all of these calculations would be going on in the minds of the oil ministries and the various navies of the world. Let's see what opens up.
Okay. Ajay Singh, for giving us a worldview in a way of where we stand on this oil shock. I appreciate you joining me at the moment there from Tokyo.